And we're live. Roy, how's it going?
Good. Time zones are hard.
Time zones are hard. Yeah, Roy messaged me an hour before. He was like, "Why are you late? Let's go live."
Yeah, and it's my fault. It's just to be clear, the miscommunication. It took me a minute, but I'm like, oh yeah. So he's in Eastern time, I'm in Central time, and yeah.
Just gonna tweet this out.
It's on Do Not Disturb. There we go. All right. Yeah. We've got a number of topics to talk about tonight. We're going to probably talk about two that are kind of newer that I don't own either of these, and I think Tevis is thinking about owning one, but one is GRAB and one is Oscar. Don't grab Oscar. Don't do that.
Roy. Yes. Yeah. I mean, I think like we can just bucket the whole concept of new names in general.
Yeah.
The lack of respect for Shift 4 while Tanner is in Vegas is crazy. Tanner is in Vegas right now at the Shift 4 Investor Conference.
Yeah. Good for him. Shift 4, though. That's fine. That's decent. It's actually a really good company. I think that there is... he'll be able to better understand it from the conference, which is really good for Tanner and for others that are investing. Jared Isaacman has been tasked. I can't remember. Is it head of NASA in the United States government?
Something at NASA,
yeah. Yeah, it's something space related, and perfect for Jared Isaacman. He's an incredible individual. What I don't know is how deep that company goes as far as talent. And after tonight, probably Tanner will be able to determine, like, is Isaacman involved and what's his involvement going forward, and then what that talent pool looks like off the top. And that can be a really hard thing to tell. So if you guys are Shift 4 investors, be sure to check out Tanner's takes. And if you're not, then we're going to stop mentioning Shift 4 because we don't really care.
Yes, exactly. We don't want that audience. Okay, let's get started.
Yeah, and let's start out before we get into the new names topic and what we look for at future investments. I think that'd be kind of a good thing to discuss. You have a new holding.
Yeah, HIMS. Or Hood, sorry.
Another one that starts with an H.
Yeah, sorry, I'm just waking up slowly. Yes, Hood.
Yeah, he may be on the Eastern time zone, but his body's in like Southeast Asia zone or something like that. I don't know.
I need to go back to Southeast Asia, man. That trip was great.
Yeah, well, maybe if GRAB keeps doing things, you can go over there and just try it firsthand.
Yeah, but, I can't remember if I actually saw like GRAB when I was down there, but I don't know if they. Well, I don't know. I don't remember it. I was I definitely didn't know what GRAB was when I was down there, and so I'm just trying to connect the pieces after the fact.
But as far as Robinhood, so you bought some Robinhood. Like, tell us a little bit about like what brought you in there. I guess first, for those that might not be aware. Like, why'd you buy? Like, we've been pounding the table, but why now? Why finally?
It's not a large position by any stretch of the imagination. It's actually a very small position. It's actually my smallest or second smallest position. And yeah, I bought very much in that like Druckenmiller style of investigate. Like, I just want to have it in my portfolio so I can take a look at it from time to time, add it to my watch lists, follow it more closely. I just, even this weekend, was researching like a video on SoFi that I released today, and a lot of it has to do with like Robinhood and what they were releasing. And I was digging through the engineering blogs for Robinhood. I was looking at like, they're talking about their deployments and interviews from 2016 when they were talking about, how they're ramping up their AWS presence and all this stuff. And like, I would never really justify my time to do any of that stuff if I didn't at least have a little taster position, because this way I can say, okay, well, do I want to build that position even further, or do I want to just get out altogether? And so it enables me, and I know it sounds like a very silly, trivial, mini thing, but it enables me to at least have some type of skin in the game, if not like the position itself going up or down, but also the opportunity cost of having that money elsewhere. And so it really is something that it allows me to do more research on the company to determine whether I want to go deeper or not.
Yeah, no, that and I love the Drunken Miller quote there: "Invest then investigate." And I often think about that, like when we eventually get to a bear market, it's coming. I don't think for at least 5 years. We'll see. But in a bull market, man, it makes a lot of sense because unless you're doing that right before earnings, the odds are it's probably going to be a good thing. You're not going to regret it. And even if you do, like it's a smaller position, but it really forces your attention to invest, not invest, but investigate something because you're already holding it. So you're trying to figure out, do I buy more? Do I sell? Now with Robinhood, I know that you know what the company is and you know what they're capable of. And that's one of the nice things too, is not too much investigation is needed there. But yeah, I look forward to it climbing both by your contributions to it and also by price action up your portfolio. So, is there a chance this week that it overtakes the next largest position, or is it like so small that there's no real chance?
Let me check. Hold on. I mean, there is a chance if I wanted to add more onto it. Yeah, it's like between it and the next largest position is like all of my positions are fractions of a percent until you get to like the top 10, and then it goes like 1%, 5%, 7%, 10%, 20%. It gets ridiculous. But I mean, Robinhood right now is like 0.11, and then the next biggest one is like 0.12, and the next biggest one is like 0.24. Like it's micro. And these are just stuff that like I have little, you know, little positions, so I can just read up more on them, just stay up to date on what's happening. I think the thing with Robinhood is like the valuation is the biggest concern right now, and in retrospect, I should have probably bought it before earnings, but I don't regret that decision at all because the earnings could have gone either way, and I just wanted to see more information. So
Yeah.
yeah,
And you still bought in, like, which is credit to you. Like I've done that before too, where I'm waiting on a specific event, and even if it goes up, and I'm like, hey, this is a great opportunity, I'm still going to buy in, even though I kind of hate it too, because it's like, oh man, I could have paid a cheaper price. But that's kind of what can happen from time to time.
yeah.
By the way, overnight markets are open. I'll look up a couple of names. Spivvy asks, what conclusions did you come after researching Robinhood's engineering post?
Sorry, let me pull that up. Where is that?
Just a couple of minutes ago. Spivvy, 705, I think.
What conclusions did you come to after? Yeah, I mean, look, I think Robinhood from an engineering, and if you guys haven't seen that video, take some time to watch it. It talks about both Robinhood and SoFi. I posted it earlier today. I think with regards to Robinhood, like they release quite consistently, but one of the discrepancies that I found is that when SoFi releases something, generally speaking, it's like an entirely new product in an ecosystem versus when Robinhood releases something, it's a feature in their core product offering. And I'm not talking about like when they released, crypto or like even the betting market is like totally new and futures is totally new. And like, so they do have a lot of initiatives that are net new, but a lot of the stuff that they release are features, right, guys? Like, oh, we're going to do options on top of the brokerage. Okay, we're now going to allow you to do, I can just pull it up and then see some of their recent initiatives that they launched. IRA accounts, like that to me is like a feature. IPO shares, that to me is like a feature. Extended hours trading, that's a feature. And so ADR that they released in 2018, that's a feature. So a lot of these are just features that they have a really consistent basis of releasing, which is great. But the discrepancy here between, I guess, Robinhood and SoFi, just going off of that video, is that SoFi is this basket of many different products that has a very wide breadth of what those product offerings do, whereas Robinhood is one product, like 10 levels deeper than anything else out there in the market. And I think that's a stumbling point that a lot of people get caught up on, is because they compare Robinhood's one product, i.e. their brokerage, which is best in class. And from everything that I've been reading from like their architecture and how everything is structured on the back end, I found this amazing, amazing blog post. And I even tagged it in my like sources in that X thread that I made, where they just reveal all of Robinhood's tech stack and a lot of the decision making that went into that tech stack. And if you're a technical person, you're like, wow, this is such a lightweight stack that is very easily scalable. And so a lot of their technical decisions are the right ones that they're making. They're planning for this business to be much larger than it actually is. And that's amazing to see. But it's just an apples and oranges comparison, because SoFi, if they were to divert all of their effort, every single engineer, designer, product manager in the company, towards just SoFi Invest, then maybe it can be like an equal race. But they're not doing that. They're diverting some of their attention to one piece versus the other, and Invest is always left behind because it's not the main money maker, because the value propositions of these companies are different. And so, just as like putting aside the culture and putting aside all of the expertise and all that, even on a manpower and on a strategic direction point of view, Robinhood is going to win that race, because their entire value proposition is to go really, really deep on one vertical and one sort of core product offering. And that's where they win. And I think that is something that I've begun wrapping my head around more this weekend as I'm doing all of this reading, is I'm looking at the infrastructure and the decisions that they're making. They're not cutting corners. They're not making decisions that are like, hey, it's fine. Like, we'll just put it together with duct tape right now and fix it after the fact. Like, they're doing things right. And that compounds onto itself, because bad decisions compound. When you put something together with like spit and tape, it's going to compound later on down the line in the form of tech debt. You have to actually, in order to move, forward, you have to take a step back to rebuild the thing that you built scrappy the first time around. Whereas for Robinhood, it's now compounding forward because they built it right the first time around. Now they're able to move 10 times faster, 5 years or 6 years down the line. And that's, I think, something that's really important to understand from a just purely technological perspective.
Yeah, and I do think that if SoFi pulled most of their team, which is double the size of Robinhood, they might get out level on options by the end of the year. So possible. No, I'm just messing. No, it is a different philosophy. You're right. And Robinhood is more aggressive, which I don't think means that they're releasing bad or shoddy products or products that don't work, but like they don't. There's a lot of polish just because they have ridiculously talented engineering staff. I think probably more talented than SoFi's, honestly. I don't think SoFi's bad, but it's just not at the same level. But yes, Ace Bivy also mentioned, let's see, I thought he's kind of on a roll. In 7-Eleven, Robinhood has primarily built and SoFi has primarily bought for its major features. What do you think about that?
I wouldn't, yes, but I think this is only true because it's overshadowed by the fact that Robinhood releases a lot of stuff, and you're sort of left there wondering, oh my gosh, like this is so many things that they're rolling out. But like in 2021, they acquired Say, they acquired a crypto trading platform, they acquired X1 for the Robinhood card, they acquired a charter, they acquired who was the latest one? They acquired this company called Merix for futures. And then they also acquired the crypto company. What is it? Bitfarm, Bitstamp? It's
Bitstamp.
Bitstamp, yeah. So
and Trade PMR.
So Robinhood does have a lot of acquisitions, but they've only really started over the past 3 years, I would say, since 2021-ish. But I think it's just overshadowed because whenever SoFi does a major acquisition, because they don't release a lot of new things, or at least they don't talk about their features a lot, it's like, well, when did SoFi acquire Technisys? Everybody here watching can say, well, 2022. What else did they do in 2022? You're like, well, let me think about that, right? And so the acquisition in itself is highlighted because there's nothing really, nothing major around it. Whereas with Robinhood, like they acquired like 3 companies this year, and it's overshadowed by the frequency of the features that they release.
And I would say acquisitions, just because a company is doing acquisitions doesn't mean like it's not a good investment or that they're flawed or they don't have a good engineering core. acquisitions are hard. Like people paint it out to be like, oh, anybody can do acquisitions. You just throw money at the problem. And that's not true, because then you get into pretty much what like Teladoc got into with Live On Go, with that acquisition that just overpriced, not well integrated, or you get into Block where they're like buying Tidal. Afterpay is fine, but like what in the world? Or PayPal. PayPal had an innovative edge for a long time. Ease off that now, like, hey, we're a lot of money. Let's do acquisitions instead. And they made some good ones, Venmo and Braintree, but even those never really were well enough integrated. Like they could have not easily, but over several years integrated everything into one like really tech stack and really put the pedal to the metal. But instead they kind of left them siloed. And then their later acquisitions, like Honey is one that's top of mind now, just were overpriced, never well integrated. Thankfully, there's a different C-suite there, all except for Frank Keller is in there. Everybody else has changed, but a lot of companies don't actually handle acquisitions very well. Robinhood, I think, does very, very well. SoFi also, I think, does very, very well. And each acquisition that SoFi does is incredibly well thought out. Like as soon as they announce anything as far as an acquisition, it's like, oh yeah, that makes total sense. Robinhood, sometimes I'm just like, okay, trade PMR. Didn't see that pivot coming. Makes sense now, but it just wasn't readily apparent there. And we'll have to see how good it is in the future. So after Howers, yeah, we can get into just a couple of names. And I was thinking I was going to show it, and I'm like, it's going to probably show how much I have on each thing. So I'd rather not do it that way, but I'll read off some things. NuBank's down about 3%. PayPal's flat. Palantir's flat. Robinhood is down 1.62%. Do you know why, Tevis?
Why Robinhood is that? Because I bought it. Yeah. Exactly.
Yes, that's why. So actually, I should be thanking you, Tevis, because I want it to go down so I can buy more aggressively. SoFi is up 2.5.
Even here.
Oh, yes, dude.
That makes me feel better.
So Robinhood, like short term, can it go back to 40? Absolutely. Like there's nothing that prevents it from, especially because they have some legal fees in Q2, and they're not going to do like what they did for crypto in Q1. In Q1, they won't do what they did in Q4 for crypto. They'll still do very, very well. And long term, the trajectory is very, very clear. The conviction for Robinhood is probably second highest out of anything that I own. Hims is really close up there too. Palantir is at the top. I have more conviction in Robinhood than I do SoFi long term. Short term, I think SoFi still outperforms, just a valuation thing, and they have a lot of tailwinds this year. So anyway, like when I have that high of a conviction in something that's not Palantir, the most I can allocate to it is 10%. And I'm at like 7 or 8% for Robinhood. So I'd love for it to come down, add another, however many shares that is, and top that off at 10% and just have those for the long term that I don't even touch, mess with. I'm not doing leaps. And also, I'll say this too, if it falls down like to 40 something, I'm going to go some leaps. I don't have any of those. I sold them all or converted them to shares already with Robinhood. So SoFi, by the way, is up 2.41%. It's at 1660. Tesla's up 2%. Hims is up 4%. So 6285. Let's see. Oscar was a big mover, and so was Grab. Let's see where that is.
Mm-hmm.
And keep in mind, a lot of these are very, very light volume, and it's been a long weekend. So it usually overnight has a longer volume. Take these numbers with a grain of salt. But Oscar is up. Actually, guess how much Oscar is up, unless you've seen it in the comments.
I mean, somebody posted 15%.
Yeah, 19%.
Jesus. Wow.
So, yeah, it's a super small float, super low volume. Grab is up 1.84%. One of the things with Grab
wants to know GME.
Oh, yeah, of course. Nala, how could I forget?
Your main position.
Yeah, GameStop is up 300%. No, just kidding. It's up 0.3%. So close.
Look, I want to address this comment from Sagig saying build or buy isn't necessarily a factor. Broadcom bought everything, and look at them. There isn't one recipe for growth. It's more about culture, conviction, moat. And I mentioned a little bit of this in my video that I made, because for the past 4 years, 5 years now, I've been consulting on the leadership teams of SaaS businesses. And there comes a time when they find that organic growth is plateauing and they want to leverage investor capital to make acquisitions. And we always, always, always on the leadership teams have this conversation around build or buy. And there is a right time and the right place. It is a mixture of science and art with regards to this, because a lot of what that conversation revolves around in these rooms is what gives us the highest speed to market. What do we have the most competitive advantage in? Is there a cost efficiency between us buying something or building it in house? And what is the long-term control that we're ceding or the long-term control that we're gaining? What is the security and compliance? How does that work from a data regulation perspective? Because you're going to migrate your entire user base into now a third party, and a lot of SaaS businesses have a lot of security hurdles that you have to jump through. And so the moment you buy another business, then all of a sudden you have to go through that compliance all over again. And a lot of it really boils down to the competitive advantage and the strategic vision of where the business wants to go and whether they can get there in a more sustainable way by building or buying. All that to say that both SoFi and Robinhood have done several acquisitions over the past several years. And like in the case of SoFi, for example, the technology platform is something that very much aligns with their vision. It's very much long-term. It's very much something that will build their moat further. And it's something that will power their entire back end of their product offering. So a lot of these conversations are very deliberate in these decisions that are made. And so even with Robinhood, right, like why do they choose to buy a crypto brokerage and why do they choose to buy a futures company versus building that all in-house? It's probably that they can go faster, they can do it cheaper, they can integrate easily, or it's something that, is a long-term competitive advantage for them. But for every major initiative and every major feature, these companies have this internal discussion around, like, even if election betting comes up or futures come up, they have had the internal discussion around, do we want to buy something or build something, and what makes most sense, and just running the cost benefit analysis of that. So my point is like, it's all strategic, and you have to give these management teams a lot more credit because all of this is premeditated.
Yeah, I mean, you just have to also look at what they're able to do. Culture is so important because that helps you build things, and it also helps you buy and assimilate things. Otherwise, you do what PayPal did, where it's all siloed. By the way, throw my screen up, please. I was wrong, guys. It was not on I was actually looking at Webull, not Robinhood. This is Robinhood Legend. It does show overnight names, even if it's not available in the overnight. So Grab is up 11.22%. Keep in mind, very light volume. Take these actions and moves with a grain of salt, especially on names that hit over the weekend and are talked about a lot. It's not unusual to see a pump like this. But if you guys are holding it, congratulations. Not saying it can't hold or not. I'm just saying after hours volume is sketchy, especially when it's like 4 or 5 billion shares in that one. So,
Bro, I'm so jealous you have access to that platform.
It's nice. Yeah. I'm actually kind of surprised. Usually I don't do it at the same time as StreamYard just because my computer's old. It just really is. So, yeah, Matthew asked, why is Grab up? It's because everybody on retail is talking about it. Like, I ended up, you've not talked about Grab, have you at all? Just Oscar?
Oh, this is why Oscar's up, because of the Bury filings that came up. I don't know why Grab is up.
Yeah, so Grab is up just because a lot of people started talking about it at the same time. Amit had a live stream discussing it, and Amit's had so many home runs. Like he's a very, very good narrative investor, competent guy, can oftentimes see trends before they emerge. And so I think he's gotten a lot of credibility over the last couple of years. And so as a result, people are listening to him. Now, this is something he's not like brand new talking about. But I think that the other thing, so he started, I think, investing in this, or at least talking about this, in early November. And Oscar is not like a brand new player, brand new stock. No, I think that especially in overnight markets and low liquidity, like there's a move in that, and he's very popular for a reason. But the other big factor is a lot of people, I think, are chasing the next big thing. And that's really, we'll talk more about this, maybe why, I'm not too interested in Grab, and Oscar's a little bit, I looked at it a little bit, I'll need to look at it a little bit more, but I feel like that's happening right now. And it's not wrong. Like if you're like, hey, I want to chase the next thing, or I think that there's a big opportunity and Grab or Oscar or whatever else is out there, you do you. I've learned from the previous bull market, and it was a painful lesson, that you get in this phase where it's just like one of these stocks pops off, and then the next one pops off, the next one pops off, and you're going win after win, and you're looking for the next big thing. And oftentimes that can skew your risk profile. So instead of saying, I'm comfortable with this level of risk and this type of play, you can get burned either by going on margin, and you're not used to and comfortable to margin, but you're like, hey, I just keep winning. What does it hurt? You take on options that you're not comfortable with, or really, really, really risky options. Or even worse, you jump into a company that you have zero conviction in. You're not a trader, you're an investor, but you're changing the entire way that you go just because of greed. And if you're seeing that with yourself, take a step back, and it's okay to just not chase every play. But I think that that's really what's happening. Not completely the whole story with Grab. Like I see what the Bulls are saying on it. I see that, some strong elements in Oscar as well. But I think that the reason why, like if you post anything on X about Oscar or Grab right now, like let me pull up my portfolio. Or my platform. So 61K views on a post that I made just randomly about Grab that was just kind of basic. And it wasn't like I wasn't chasing clicks. I'm just like, hey, I'm not going into it because it's an international play and I have enough exposure. And the second thing I already mentioned, that I'm not looking to chase anything else. For me, I'd rather for those stocks that I have high conviction in because I hold them, I would rather allocate more to those, unless there's really a gem out there like HIMS that I missed, or an opportunity like Nvidia where it fell and I'm like, hey, I've wanted in this for a while. Let me go ahead and get in.
Bro, yeah, it's that's actually crazy. That Oscar post that I made was my most viewed post. And like this is the thing that just makes me laugh sometimes, is that it's not you as the content creator who decides which is your best content. Like I definitely, like that post was something I just threw together in bed as I was reading the IR, the latest earnings report on their investor relations page. And that got 350,000 impressions on X. And that was my number one post of all time on X, around a stock that I don't talk about at all. And just having some like super basic facts. So I think there is like a really big appetite with regards to finding new names. I don't necessarily agree with it, but I understand how we're in this boat, because all of a sudden you have a lot of people who have made a lot of money with Robinhood, Hims, SoFi. Like you just throw a dart at a dartboard for the YouTube/retail investor names, and a lot of people have made money on those ever since November, and they want to allocate that money. They want to keep chasing new gains, and some of them are going to do that. A lot of them are going to get caught because you can't replicate high quality companies and just consistently find multi-baggers. It's not that easy.
Yeah, and I'm doing the opposite of basically what I did last bull cycle. Is I had a couple of really, really good outperformers that I did well on, and then I went to less quality companies and ended up holding MVIS. Ever hear of that one?
Yeah, Mavis something.
Yeah, Microvision. Yeah, but Mavis is the way that you pronounce the ticker. And like they have some okay technology. Like it's not all like scammy and but like I had nowhere near the conviction in that company. But I saw like, hey, all these other things are running. Like this has a good chance of running too. And also, I was it ended up beginning with options. I was like, hey, the yield is really, really juicy here. So I was chasing yield and ended up getting burned. So it was a terrible, terrible mistake. Oh, okay. So we have an offer from Samsolid. He's an awesome guy to jump on. He's going to probably talk some grab. Do you want to bring him on?
Yeah, sure.
Okay. Let me go ahead and send the invite. Yeah, if you guys don't follow him, he is awesome. He thinks very, very differently than I do, which is we agree on a lot of stuff too. But see, I'm not sharing this with everyone.
Strip club stocks with shareholder benefits. I think Rick is your stock. Rick Hospitality. I think that's up almost double since July. So, we're back when.
Steve mentioned that one. I still remember from like a year and a half or 2 years ago, where that's an indicator of the economy for him.
Yeah.
And
this is not true. I just refreshed Robinhood and it's only at 62.
Well, let's see.
Liars. How did Canada lose to the U.S. even in hockey? Canada's not having a good time at the moment. Yeah, man. The funniest part was like our prime minister and then our prime minister to be, or at least the front runner. They were both at the game, and then people booed the national anthem and they lost, which was hilarious. But they're gonna play again on Thursday, I think, in like the final or something. So we'll see how that goes. Welcome.
All right.
What's going on? How are you guys?
Good. How are you?
Doing good, sirs.
Glad you had some time to join us. And have you guys interacted before? You two?
No, first time meeting.
Yeah.
Okay.
Yep. Nice to meet you, Tevis.
Yeah, we message somewhat often, and you always have really good insights. So there's his X handle. Go ahead and follow him on X. You're a him shareholder as well. Is that correct?
Yes. I wish I didn't trim as much, but I trimmed, but I think it's like about 2% of portfolio now. I got in like around in the teens, the high teens, and I started trimming too early. I mean, I think it was mostly attributed to the fact that it wasn't even a big position to begin with, and it was kind of like, all right, let me just buy this and I'll just kind of forget about it. And I don't know, the thing just took off, man. And I didn't really know what to do because I don't know if you guys know, Amazon is a very big portion of my portfolio. So it's, that whole argument where it's like Amazon's going to take over. Like, I never really think that like Amazon is just going to take over another business because of the fact that it's getting into it. Like, there are many times that they've tried to get into something like where they failed miserably. But Hims is dead. I think of it more of a software product than anything, not necessarily pharmaceutical or a medical company or anything. But their margins are like software margins for the most part. And honestly, my trajectory and my modeling was that if they just decrease their spending for marketing over time, then this is just an easy win. It's trading pretty cheaply at the time. So I'm just letting that thing run.
Yeah, I'm sad that I sold covered calls. I thought conservatively, but I let some go. I rolled out the rest of my shares, but some of my shares went at 40, some of them went at 50. Thankfully, I still have most of my shares, but still a really good gain. Like, I ended up buying 40% more Hims at like 27, and I'm like, not that great of a fill, but that's when the money was available from taking some gains on Palantir. And it's
that was like 3 weeks ago, right?
Yeah, just like, okay, I'll take that kind of gain in a couple of weeks.
That was 3 weeks ago.
Yeah, and of course it's here running at 62 and everything, but no, it's like that's one of the interesting things with Hims is it doesn't really feel overvalued here. Now, is it deeply undervalued? No, it's not, absolutely, but it's an incredible company. I think of it like you do, and that's the way that CEO refers to it as is it's a data play, and it has margins like it too. And I agree with you completely. Like, that was I became a Hims shareholder before that Amazon piece, but Tevis and I were talking about it. I'm like, man, Amazon, I just don't see it doing what everybody thinks. And I'm like, thank you, Mr. Market. I can add more Hims cheaply. So the market loves to give you those opportunities. So what do you think is going to happen? Any thoughts with earnings for Hims?
I mean, I think they're going to show up just like they usually do. I just, like with a lot of these companies, like even though they show up, that doesn't necessarily dictate how the market's going to react to it. Like, two way completely different things. I think the time to add to Hims in the teens is probably in the past, considering that what stage we are in this bull market. We're already on year 3 of this crazy raging bull market, and the market's definitely broadening it out, not to just these small cap stocks, but also to equities in other markets, specifically emerging markets. And I was actually watching guys earlier, and you guys were mentioning that during this point in the market, it's good to be aware of just how things happen in 2022. And honestly, a lot of the people trading today or investing today, they were not trading like the early 2010s or investing the early 2010s when people just had complete disbelief the market was going to come back. And that happened continuously, expecting every single time to be a recession up to like around 2016, where the thing just took off from a 2-year consolidation. And I think we're kind of at that time where, you know, returns might not be as vast as they had been for the last 2 years, where people were just in disbelief that, you know, we're in a bull market again. And now everyone has kind of flipped to one side. So, you know, we've seen it since the beginning of the year. Max 7 has just been underperforming all of the indices, and especially IWM and everything. And the 10-year is like still 4.5%. And I think the 10-year coming down from like 4.9% back down to 4.5, where it is now, and the dollar pulling back about 3%. I think that is what is attributing to a lot of these smaller cap companies that are debt heavy. And, you know, even though you have companies that don't have so much debt with large cash balances, the way these fund managers work is that they don't want to really get too risky, especially when borrowing costs are so high. So now that that has dropped back, it's like the money's flowing back, and people are like, hey, how come Amazon is like basically flat year to date? How come Google is flat year to date? Whatever. It's because it's flowing into these other companies that they've missed. And it doesn't take a whole lot of money for these hedge funds to buy some hidden stock and make it move versus like buying an NVIDIA.
Oh yeah. Yeah. It's a super tiny float. And that's one of those things. So you're a GRAB shareholder, correct?
Yes, sir.
Okay. So you had a great post, and I know the answer to this already, but let me throw the question out there. Is GRAB another HIMS? Is it going to move as volatile and just, you know, climb up, you know, because it's like, you look at it, it's like $5 a share. Surely it can get to 60 in this year, right?
Yeah, I made a post about this. Like, I think, okay, so look, I'm not going to be the one to take credit for this, but on Friday night, I was with the family. And, you know, I was just like messing around the phone. Kids were busy playing around in like the store and stuff. And then, yeah, no, ATF was right. Okay. So I found this group called GRAB Community, GRAB Retail Investor Community. So I joined it and I was like, oh, hey guys, I'm this. And then I tagged Amit in it because like I put some video that I was with. 87 people were part of that group. Yeah. And then Amit joined and the whole thing just took off after that. And I don't want to say that I'm the one who caused it, because obviously Amit has a very large following. Like you were saying earlier, he's had many great wins. People think this is going to be like a 10 times, and I don't think so. I've been somewhat conservative with my price targets, mostly because like this is more of a long-term thing for me with some leverage as well. And my leverage is like 2027. Like it's not even, I'm not looking for a return like in the next couple of weeks. Mm-hmm. So I've had my price target, and I actually just recorded the video and I'm going to post it today. But my price target for the end of the year is 6.5. So we're like almost there after hours right now. But that would put it around, I think maybe like a $26 billion market cap. And considering that its growth, considering its profitability, I think that's a pretty, you know, good estimate to have. And then 2027, beginning of 2027, I think the price target would be like 7.5. And these are all conservative and linear modeling. So this is basically assuming what it is today, what analysts have already estimated. That's where I think it'll be according to the price to, according to the EV to EBITDA multiple. So is that going to happen? Honestly, if the bull market continues, it'll probably exceed it. I don't think, I can't see it making a HIMS move or a Palantir move. But I don't know, and things can happen. Like Palantir was just $20 like last August.
Yeah, and silly things can happen in a bull market. So, you know, like with upside, you never say never. And in a bear market, like downside, never say never. But one of those factors is the float size. Like it is massive. It is not small. The share count is. It surprised me when I looked at it. I'm like, oh man. Because I was looking at the market cap, I'm like, how in the lots
it's a $19 billion company. Yeah.
So, by the way, if anyone's watching and you're like pretty new to the markets and you're not familiar with the term market cap, stop everything, pause the video, go to Investopedia, do some research on market cap, or at least bookmark it for tomorrow. It's critically important you do that. Otherwise, you're just going to make judgments on stocks based on the share price and what they're capable of doing. Don't do that. Don't make that mistake. Almost every new investor does that at some point.
Yeah.
GRAB is 12 times smaller than HIMS, guys. Go pick it up.
Yeah. It's HIMS was the same price as GRAB, just like in 2022, so it can make the same move. It's like, no, not even. HIMS is cheaper than GRAB still in terms of market cap. So, you know,
let me ask you this, Sam,
yeah,
because I do want to pick up on this comment here. I think that, you know, you have a retail in the market, you have retail favorites, and those retail favorites can stay up for far longer than their fundamentals justify as a result of the retail community, just for whatever reason, latching onto those. HIMS is one of them. Hood is another one. Like, you know, which, you know the stocks and what they are. And I think especially with companies that have low stock prices, not necessarily low market caps, like people just don't really realize the potential is capped. Like if this thing's $20 billion and it's, you know, in Southeast Asia doing the revenue that they're doing, the growth that they're doing, like where can they really go, realistically speaking? But I guarantee you there's people who are retail investors who just watch a couple of YouTube videos, don't do any due diligence of their own, and then start buying this thing, who think that this is going to 20x. And so I think that that is another layer of this, to say that the market is not necessarily always rational. The market is not really always based in reality. That these retail companies, especially when they're pumped by, you know, people who are making content, myself included, over time form this cult-like appreciation of these names, and that can keep it higher than what is rational.
it can. I think that I mean, especially when it comes to these smaller cap companies, 19 billion is definitely not a small cap company, and that's one of the reasons why I don't think it's going to make some crazy epic move. Like even when Palantir was in the single digits range, what was it, like in the 20 billion or something like that?
Oh,
So it was like at the bottom of a bear market, well, early 2023, and it is like it was the beginning of a massive secular shift in AI, right? So Palantir was a part of that. GRAB is not part of some massive secular trend in AI, right? Yes, they can instill AI. I believe GRAB is a software company as well, and that's the reason why I'm very attracted to, you know, its fundamentals. But we're in the third year of the bull market, right? Like this isn't 2022 where you got HIMS at like $3, you got Palantir at $6, you have SoFi at like, I don't know where it was a month ago. This isn't. It's a very different market. Can it be sustainably? I think GRAB, in terms of GRAB, I think that's, we probably have $3 is probably the bottom, right? And the only reason why I think that is because it already has such a big institutional holding. But on top of that, it is not a new company. It's been around for 13 years. They went IPO probably at the worst possible time you could go IPO. But at the same time, like they have a lot of backing from huge conglomerates like Uber, right? Dara, I cannot pronounce the guy's last name. I don't even want to pronounce his last name because I'm going to ruin it. But he's part of the board of directors, and Uber owns 42% stake in the company, right? Like, so it's just like, it's very hard for these companies to fail when they have that much backing, especially when you're on the reputation of Uber. So I think your question was like, can they sustain that valuation? Can they sustain that valuation if over a long period of time? I think GRAB can in this aspect. And I don't think Amit is pumping the stock. I think he has a bullish case on his price target, $10 by 2027. I don't think that's bearish. I mean, sorry, I don't think that's like pumping the stock. If he was pumping the stock, he'd be like, this stock's going to be like $100 in like the next year or two. Like that's pumping the stock, right? But if you're sharing due diligence with people and in a community, and you already have a large following, it's like, why wouldn't you tell your crowd about it? Wouldn't you want your followers to be in companies that are like really good, that are probably have an asymmetric return? You know, if you think of in terms of risk, because I think of the market in terms of risk, right? So I want to be at the goal of everyone's day should be to beat the S&P 500 over a long period of time. So 8%, right? I think GRAB will beat 8% annually. And I think that the chances of losing your money are much lower than investing in I don't know. I don't want to say a name because I feel like I'm going to upset some people, but in other names, you know, like longshots, like Tem, for example, or Tempest AI. Yeah. I have shares in Tempest AI. I bought that sucker when Nancy bought it, and it was more of like a trade, and then the thing just ran, and then now I trimmed it down to like a core position that I'm probably just going to leave, right? Like That's kind of where I go with my positions, where whether it's leverage or not. And I think this is an opportunity for myself to do that. But I'm not going to sit here and be like, I'm buying my full position right now. I've been in since the mid threes, right? Before a lot of people probably even knew about it, right? And some people probably just found out about it this weekend. Yeah, never mind. He's talking about tech. Dude, this crowd is crazy.
Yeah.
Is this Amit's live stream? What in the world is this? Tevis, you're quite the popular guy.
There's so much overlap. It's the same people who are here, just on YouTube. But yeah. Sorry.
Well, I did put the link up in Chris's Discord, so maybe some new crowds probably came in here, and like the people inside there, man.
Tevis's channel's full of degenerates, so and I love them. They're awesome. So
have you take a look at Twitter lately? It's all degenerates nowadays, man. Like,
I mean, like that's what a bull market does, and I mean, like we're not that far removed from a bear market, but I know. And that's why I try to like mention things like market cap that like, oh, everybody should know that. No, there's always new people to the market. And like, they're just simple things that we take for granted, that it's in lessons that we've learned that, you know, if we can pass on just a little bit of that to the occasional person out there and help them out and not make the same mistakes that we did, like mission accomplished as far as I'm concerned. But but as far as what Amit's doing, it's kind of like when Warren Buffett buys a stock, like, is he pumping it? Well, I mean, he's just Warren Buffett, so people follow him into that trade, or Ray Dalio or whoever. Amit is not on that level yet, but I mean, he's awesome.
Yeah, I mean, I didn't mean it from like a negative perspective at all. I do think there should be some distinction, because like, I mean, by the same characterization, I've been pumping SoFi for the last 3 years. And meanwhile, I hold a core position and I'm just talking about the news and I'm talking about the company. And just by talking about the company, there will be people that are buying it, or there will be people that are holding it if they're shaky on their conviction themselves, or people who just don't do their homework and want a condensed version. And so I don't think Amit is doing anything differently for Grab. He has a thesis, he has skin in the game, and he's just talking about it. But because he has such as much substantially larger following than a lot of people, and this is where it comes down to the individual people themselves, right? Like, people will just throw money without doing homework, right?
I'm gonna turn off the comments. Like, you guys are crazy. I can't look at this and have a straight conversation. You guys are crazy.
Hey,
I apologize, Tevis.
746.
No, dude.
I apologize, Tevis. I apologize.
This is a daily occurrence for me, man. This is rookie. You gotta turn that off.
It is fun. Okay, so you mentioned Tempest AI. We're all shareholders. It seems like telehealth is doing well. Oscar is one that I know that Tevis was looking at. I looked at it too. It was interesting, but not compelling to me. Are you familiar with that name, OSCR?
Yeah, honestly, there's so many positions. There's so many things I'm saying right now. Like,
LFMD.
Honestly, I have LifeMed. I bought Life.
Yeah. So
what I did was, well, going back a little bit, when I trim HIMS, one of the main motives for trimming HIMS is because I want to diversify my healthcare bucket, because I kind of knew that healthcare. Well, I kind of figured that healthcare is on a secular trend because it's been really lagging lately, but that was like open for disruption when it comes to AI and technology, right? So then I already had the HIMS piece down. That's basically the pharmaceutical front and also the medicinal front. And when I think of like HIMS doctors, like they're mostly like outsourced, right? And they kind of bring them in. They outsource all the doctors that come in to have the appointments. LifeMed is more like a small subset of HIMS, but it's like dedicated with doctors who are actually on payroll, right? So I wouldn't buy LifeMed because it's like, oh, I want exposure to all these like medicines that are being released that are that are compound and all this stuff. It's like, no, that's not the reason why. And plus, like, LifeMed is under $1 billion market cap at the time, and it was like a long shot. It was like a moonshot, small position, and like it's just like rallying hard, right? And I figure, especially when it comes to this bull market, it does kind of warrant small positions into these random moonshots that do make their moves, as opposed to maybe last year where I was highly concentrated into maybe like 20 or less positions. Now I probably have more, but these other positions like you, Tevis, are like smaller positions that if like, let's say it's 0.5% of your portfolio, if they make it 5 times, boom, that's 2.5% of your portfolio. Like that. And if you have like a bucket of this is what Peter Lynch did, where he had a small bucket of a bunch of small fringe plays. And let's say that was like 10% of your portfolio, and let's say 3 or 4 of them make like 10 or 15 times, then you've already outperformed in that small bucket that bucket went from 10% to probably like 25 to 30%, and you've mitigated the risk with the ones that didn't make it. Because as Warren Buffett says, you only need like a home run, maybe like 3 or 4 times to live off your portfolio.
Like, I started buying games in August, and me and Roy were talking about it on live streams. And by November, I was saying it was like a 5% position. I said, I could see it becoming 7.5% position, maybe a maximum of 10%. By the end of January, it was 25% of my portfolio.
Like, boom.
Not from allocation either. Yeah, that's a right way to do it. Yeah, I agree with you, Sam. Like that, it's the same thing for me. Is if I have a very high risk but potentially high reward name. So I hold just one of those in my portfolio right now. It's Accelera. It's a tiny biotech thing up in Canada. I invested in it despite it being in Canada, but
is it ABCL?
Yeah, ABCL. So it's one of those that I think might be dead money for years. It has a chance of, like, I think at least a 25x greater chance of it just not doing anything at all. So I'm like, okay, I'm comfortable going up to 1% allocation, which is like, oh, no big deal, dude. If it hits a 25x, it becomes a big deal. And I allow myself, like you do, maybe it's a different amount, but about 5% of my portfolio can be in things like that. I don't have that right now, but when I see opportunities, I don't mind building those out a little bit and riskier stuff.
Yeah, no, for sure. I mean, like 1% of your portfolio, if you attribute, like, let's say, okay, so Amazon is nearly 20% of my portfolio, and it didn't start out with that much, but I would say Amazon started out with like a 7% position. So it took a little bit of trading around that with leaps and stuff, but now it's like 20% of my position. This was back when like Amazon was in the low hundreds. So now, am I going to lever up in Amazon? Probably not. It's very hard for me to see like the S&P go to 8,000, and that it would take that for Amazon to go up another 50%. Like, it's not going to make any crazy move anymore, in my opinion. Like, oh man, dude, like these freaking private chats, man, I can't even. So, anyways, I'm losing my train of thought. I like read one of these messages, and it's like, yeah, these people are crazy. But the way that I see it is that I would not, if for someone who's getting to grab right now, I would not make it like a big position right now. Yeah. I wouldn't, because well, I guess it really depends on how you look at it, right? So my position has grown pretty big, and I've done a lot of research in this company. So I think for myself, that does warrant a larger position. But for someone who just saw this yesterday, I do not see any reason to go above like 1% of your portfolio max, only because it's like you don't have the conviction. You can't borrow this conviction from 1 or 2 YouTube videos, and that's pretty much everyone in the market, dude. Like, imagine Jim Cramer in the 2000s or even the 1990s. People were buying anything that he said on TV, anything, especially the dot-com bubble, like anything he had in TV. So even today with CNBC, same thing too. But now you have all those people coming on there, so
let me ask you this, Sam. Is there any stock that, stuff that we've talked about, or maybe let me just say, maybe even we haven't talked about, under 20 billion market cap, that you, if you didn't own already, that you would build into a larger position here? Like, because so many things that are smaller market cap have run as a result of this FOMO in the market, I'm just asking, is there anything right now that you see that you want to make a case for?
There was Grab. Oh, Lemonade. Lemonade, I'm continuing to build this position. Hey, that guy knew. I'm continuing to build this position. I'm still, I wouldn't say I'm like wholly convicted to make it a huge position, but I think I got it like 1.5% right now. I think now in the market is not the time where I want to like lever up like hard, like 2024. Now is the time where it's like I kind of want to mitigate my risk, reduce my volatility in my portfolio. And Lemonade was something that I've been interested in a while. Freaking missed that thing when it ran to $50. And ETF phone home is crazy. But Lemonade seems like, I think that, well, that is a software company as well. It's not really a super app, but they're mostly in the insurance market. But I think that they still got a little bit to reach profitability. But the growth is heading pretty good. The metrics are really good in terms of retaining the amount of people who are signing for their premiums and so on. I use Metromile, which was purchased by Lemonade. I've been using Metromile for like 5 or 6 years. I thought that app was great. Lemonade app, I'm not so sure anymore. You know, I'm still kind of deciding that one, but it seems like another software company with high margins, which is great. The unfortunate part is that's an insurance where the margins aren't as high anymore. So, but yeah.
Yeah, Lemonade is almost 2% of my portfolio. Same
Oh,
reason.
interesting. Okay.
Yeah, that's actually Tevis's horse for the outperformance, like the gift challenge. We did a gift challenge, which we exchanged stocks, and I cheated because I got to give HIMS, which I think that'll work, probably outperform everything that we have in there. But yeah, Lemonade, it's interesting.
So wait, when did you start buying Lemonade?
I started buying it around the same time I started buying HIMS. I caught it around like $18 or so.
Oh wow, okay.
And
That's when I wish I bought it.
like a few months ago, right? And
Yeah.
I just posted about buying it, and then I just bought all the way up, like 25, 30. And so I don't know. It's still a small position, relatively speaking, like 2% or so. But I'm reading up on it, learning more about the company. It's nothing that I want to build into like a super large position.
Yeah.
If it gets there, it gets there, and that's great. But it's nothing that I'm just going to keep, buying hand over fist if I don't understand the business fully. I think that the profitability aspect is interesting. I think the efficiency unlocks for Lemonade of how they work, I think that's really interesting as well. Like the amount of stuff that they do automated. So we'll see.
Yeah, definitely runs in the software sector, so that's really good. But I mean, that's probably something I'm going to hold for a while, only because it's growing. They're expanding they're expanding their customer base, which is pretty good. I got in probably in like the low 30s when it dropped recently, and I added to it mostly from just proceeds of having cash and stuff. So I haven't added to it yet recently, like in the last week or two. But I want to do more research on it before I decide to pull the trigger more on it. I do have a spec bet on Peloton.
Yeah, I saw that.
Completely speculative, completely speculative. And just I don't know. I mean,
just the turnaround aspect?
Turnaround aspect, but I think they're going to be acquired. And I know a lot of people say this. I think Apple's going to acquire them at some point, or they're going to go private. But I mean, the CEO is an ex-executive at Apple, as he used to be EVP at Apple, and he's now the CEO of Peloton. And if you think of the efficiencies that Peloton's going through, and that's really how they're gaining operating margin and gaining free cash flow, because they are just running lean. Other than that, their revenue is actually declining. So it's not like they're really going to grow massively or anything. It's more of cost cutting game for them. And I think they can continue to do this because it is a software company as well. I think if Apple were to acquire them, easy win to cut the company in half. Like you could cut off half that staff, and the people that engineers at Apple could probably figure out a way to make their process more automated and everything. And not only that, but Apple's going to get a lot of customers from them, especially having that brand in their name. So we'll see. I mean, Tim Cook is supposed to announce something, I think February 19th, right? So
there's
a member of the family. Who knows?
Well, also a lot of redundancies there, right? Because Apple has Apple Fitness, which they've launched, and then Peloton also has their you don't even need our bike. You can just buy our subscription type of fitness product. So that's an easy cut right there, or you just merge them together.
Yeah, exactly.
And Apple's at that
stage. Easy win for them.
Just before you joined us, we were talking about acquisitions versus like building in-house. Apple is not good at building in-house anymore. I still think that they do handle acquisitions pretty well. They did it phenomenally well in the past, but I expect that if they acquire Peloton, that'll be a really good thing for them, and also for Peloton too. Like they have infinite assets basically, and they have massive scale and appeal, and it's hard to see a potential acquisition with Peloton going wrong. So very interesting. When did you say that announcement was, Sam?
So Tim Cook
It's this
I
Wednesday.
think it was, this Wednesday. He said we have a new member join the family. So I don't know what that's supposed to mean or anything. Could be a product, could be a company. I don't know. Go ahead.
Dude, knowing Apple, it's going to be like, here's the iPhone, whatever that looks
Give me something
exactly like
stupid.
all the other.
Yeah. I'm not getting myself excited for it. Like I don't think I'm just saying that I think this is the long-term play, and I have
So what
calls
is
that
that
expire in
time frame?
27, like whatever.
What is that time frame that you're looking at for Peloton? Or like, how are you playing it? Are you buying shares? Are you buying leaps?
No, I just have leaps. I don't, it is such a small position that, if this thing runs $20, then I've made more than enough on it. I've already de-risked because I got in these, I had small amount of shares and then it was down like $7 the other day. And it was like before the earnings. So I'm like, you know what? Zero or hero. So I was switching the leaps and then I already de-risked by taking out my cost on it. So it's just a free ride at this point. Like not even 1% of my portfolio, not even close. So, I'll just see how it goes. My time frame, these are 2027. So we'll see what happens.
All right, guys, we're going to take a quick 30-second ad break, and we'll be right back. We figured at the 1 hour mark, we'll do that. So make our $2.
Wait, are we not on?
We're still
We're
good.
live. Everybody can see us.
And it's funny because like half the YouTube premium people can see us. It's just the plebs that watch a 30-second ad now.
Oh, okay. That's funny. I'm not monetizing the account yet, so I don't know how that all works. That's pretty funny.
Yeah. Well, one day, probably not far from for you.
Yeah, I got 950 subs, so we're almost there.
I'm really glad that the name you mentioned, as far as a speculative bet, wasn't JOBY, because then I'd just have to like leave and be like, I'm done.
That would have to be a low margin business. Like, there's no way. Like, if you're selling flying cars, like that is a completely low margin business, gross margins that is. And I can't. If something is like 20 to 30% gross margins, like Transmedics, like it's so hard for me to stand that company. Mm-hmm. But I don't know. That's something I just battle with, trying to get outside of. I sometimes get outside of my realm of expertise, and then it's just I kind of shoot myself in the foot and learn the hard way every time.
Yeah, and that's one of those things too, like where I feel like I'd have to do a whole lot of DD on something that I'm like, I don't know if I'm even that excited or interested in it. But like one of those is Transmedics, is like the organ transplant business. I knew nothing, and I still know like very, very little. I'm just like, it's not a core competency. It looks undervalued, but I'm not going to buy something because I'm not a trader based on it being undervalued. I do swing trade, but and also I'll speculate on names. Like I mentioned, grabs I'm not going long term, but swing trade opportunity probably, especially with the retail interest. By the way, OSCR is up 19.47% overnight.
That's crazy, man.
Again, it's low liquidity, so take it with a grain of salt, guys. I wouldn't chase it personally, but
it's too bad grab doesn't sell overnight.
Well, I mean, it does on some exchanges. I know Boats has it, and so it's listed on Robinhood Legend. But let's see where that is. 14%.
Have you guys heard of these? Because this poor guy has commented like 10 times right now. So I just want to bring it up. Seda and Oddity. Oddity was the SoFi IPO, right? That they had in 2024. Like SoFi did their IPO.
I've never heard of this.
Go Flames? Is that a Calgary thing? I don't know. I've never heard of them either. Maybe put your bull case in the comments. Flying cars are the future. I don't know about this, man. Like,
so I have a relative that was in special forces for the Army, like very, very much in that, into like flight and aviation specifically. Worked on several different kinds of helicopters. Ended up, when he retired, worked for a couple of private hangars and managed like the whole hangar. So very, very savvy. And I asked what he thought of like evtols as a whole, and he just, drones. Like he's like, maybe there's a market for it, maybe there's a niche, but like, what can they do that drones can't? And the answer is not that much. So
yeah, if Anduril was trading public, would you guys buy it?
Yes.
Yeah, me too. I would buy it.
For me, like usually when I buy investments, it's simply there to make money. This one would be I think that it will make money, but B, I like Palmer Luckey a lot. breath of fresh air, and they're, I mean, they exude innovation. They absolutely do. They're a disruptor. I mean, they're built in many ways like Palantir. So, although they're a hardware company instead of software, but
here's my thing. I think Palantir is going to go higher, and
probably.
I think it'll probably go higher, not because it's got the momentum in this. I think that they're probably working up a deal with the U.S. government for some crazy $20 billion contract or whatever over the course of 5 years, whatever it is.
Well,
we don't know what it is, but I think that that's going to happen. And I think people are starting to find out on Wall Street, and they're starting to buy it up. And that's the reason why it goes up every day. Otherwise, there's just, I mean, I don't know. There's no reason to preach. Like that's what I think is going to happen.
This was the
yeah, she's buying. Yeah, I saw that.
It's not only her, it's like multiple members in that committee for Homeland Security, subcommittee for counterterrorism and intelligence, committee for armed services. Like there's definitely something going on behind the scenes, because 4 Congress people have now bought Palantir. And this is like the main thing that gives me FOMO, is because I know this is going to be a pretty compelling bull case, and it's going to last for the entirety of the administration too. And this is just like pure signal that these people are buying. It's I don't know.
And there's no way like they're not involved with Doge at some capacity, or at least won't be. But I mean, like we see the way OSCARP is now regarded. We see indications like this. We see ex-Palantir people tasked for certain levels of government, and current level people of Palantir, like since November, at least being rumored for being tasked for. It just, the way that the company is seen is actually correctly, that they're an absolute unicorn. Even Tevis sees it now. So and I don't mean that negative.
Are you gonna buy back? Are you gonna buy back?
No,
he's not. No.
I don't, I honestly, I don't see like what will be wrong with buying back even at an inflated price. If you're just going to hold for a long period of time, I'm not saying like go like 5-10%, like, but I think if my conviction of company was so strong and I was going to hold it for decades, I wouldn't care about buying here. I honestly wouldn't, especially if it was money you didn't need. I'm not trying to convince you to do it, because it would have been a better idea like a week ago. 3 weeks ago would have been a better idea, but yeah.
I mean, a year ago would have been a better idea, but like, I think that if that money was just sitting under my mattress and I wasn't doing anything with it, and the only options were buy Palantir or leave it there, obviously I would buy Palantir at whatever price it was, because even if I'm down on, paper losses for the next 5 years, I can just still hold it. But the fact of the matter is that that money is competing for like
other opportunity,
the
attention of all the other stocks in the market, right?
Yeah, and at a certain point, like it makes sense to, really like it's fine how speculative plays, and I love that, Sam. Your philosophy on that. You're not holding like, 20 things at 5%, which would be, like yes, you're like concentrating in core convictions. You got your speculative plays, and which is which. So unless something changes, there's a real reason for it. That's a great way to do it, but. Yeah, usually, like if Tevis did buy Palantir, it'd probably be like 100 shares, maybe. Maybe not.
Say if we bought Palantir, it'd probably go down.
I would.
This is an ongoing joke everywhere.
Save my covered calls.
Yeah, this is an ongoing joke everywhere. Like, when did this all start? Because even in the Discord, everyone's saying on there too. It's like, did I miss this? Like, all of a sudden, it's like if Tevis is buying, it's going to go down. And honestly, I don't know. I don't know how that got so big, but like, was there some time when that happened? Like, did I miss something?
Like when I bought SoFi, I don't know, these degens, they start things, man. They totally gang up and start random rumors. And then I'm just here. I think my camera froze, but
we can hear you.
I think my phone's ringing. It might be Matt calling me or something. Hold on.
I actually got to bounce soon.
Appreciate you coming on, and
thanks for inviting me. Appreciate it.
Yeah, and real quick while you're still here, we'll jump into questions here, guys, in probably like 7 minutes. We'll wrap up with questions for the last 15. Sam, if you want to bounce, anytime before then you can. You hold NuBank. You and I are NuBank shareholders. What do you see as far as the opportunity there? Like of course it dipped, it's risen. Is it too late in NuBank? What's the thesis?
It's just, I have to say, like, NuBank and Mercado Libre, and also small position D Local. These are just phenomenal companies to own. And maybe not so much D Local because my conviction was just never high on it. You know, like management still needs to gain the respect back. But Pedro Arndt, he actually used to be the CFO at Mercado Libre. That was one of the reasons why I bought D Local when he joined.
Sure.
It's a very risky market to be in for D Local, much more than NuBank and Mercado Libre, because D Local, it is headquartered in Latin America, and a lot of their revenue does come from a lot of the Latin American countries, but they are branched out in Egypt, also in I forgot the name of the African country that they also have besides Egypt, but like they're in emerging markets and they're doing the back end payment system for all that, right? So it's not something that I would stick to, but NuBank, it's like, dude, I don't know why they sold it down to $10. Like, I don't know why. And when they did, I was buying hard with calls and leaps. And don't get me wrong, got scary for a minute. But I don't know why the market sold it that low. And they did something similar with Mercado Libre, but I mean, I do know why, because it's mostly algorithm and institutional driven to bring it down low because the Bovespa was dropping as well. But it was just, I don't want to say it was the most obvious thing, but I was pumping that thing hard. Like I was releasing so much content. I wrote articles and everything. I was telling people in Chris's Discord about it. And like even Chris got into during that. Even Chris been in NuBank for a while, but like that opportunity was like those rarely happen.
Oh yeah.
And it was just, now it's back at 14. You know, but they're gonna have earnings on Thursday with Mercado Libre. So hey, we could be back at 10 again, but I don't think that company is going anywhere. I think it's going to get only bigger. Warren Buffett sold half his position, last quarter.
And the nice thing about very, very high quality companies is even if you're buying it and it turns out, oh man, 14 was not the opportunity that you thought, and it falls back to 12 or 11 or 10. If it's money you don't need right away and you have long-term horizons, like it's hard to see you lose money on that play.
It's very hard, especially with NuBank.
Yeah, short term anything can happen, but yeah, that was the gift. And I had only shares, and it was only a small position. And when the market gave us that gift, I'm like, oh man, I will double my shares.
I did nice
by a bunch of leaps. I have more leaps than shares right now. So
yeah, me too. I went to
generate.
generate, but a lot of them are married now because I was in naked and then I ended up marrying them as it kept going up. But it's just, So out of curiosity, where do you see Nu in a few years from now? I don't know, price or fundamental wise. Like fundamental wise, I could definitely see them in a few years being in Argentina, without a doubt. I think Argentina is a very attractive market. In fact, Mercado Libre, they registered a trademark for Mercado Banco, and they are planning to expand into Argentina, which is very interesting. I mean, who would not want to be? I would actually marry Matt because he's probably like a multi-millionaire now from Rocket Lab. Like I would marry Matt. Hell yeah. Yeah. But platonic. But anyways, so it's just I could see NuBank going in there, and they were talking about some switching their headquarters to the UK for some, probably beneficial for financials and taxes wise, whatever. But to be honest, I mean, I think price wise, I think NuBank could easily be in the $20 region in a year.
Oh yeah. I was curious on both, and Argentina is interesting. Just the Meli turnaround there. Argentina previously was the second largest economy, and it looks like it's either I don't think it's regained that quite yet, but it's poised to behind Brazil. And so them going into a much more stable Argentina under Meli is a great thing, I think, for them. They're already doing well in Mexico. Colombia is okay, but it's hard to not see them basically take over all of Latin America. They do have some competition, but I love that company. Meli was my second choice as far as LATAM exposure, and I just see a lot of. I wanted just a little bit of international in the highest conviction quality company that I knew, and that was NuBank. But if NuBank did not exist, it'd be Meli.
You don't own Mercado Libre, right?
No, I don't own it. Well, I own it through PayPal. PayPal owns like 5%.
I didn't know that.
Yeah. So they bought it like way back in the day. It's You know, it's done well for him. But one of those things that they actually did right under Dan Schulman. So, but yeah, D-Lo, I think it's more of a commodity. I don't know. It still has higher margins just because you're not in the United States competing with, you know, what you are over here. But it didn't excite me as much as the others. I think that the founder's an interesting figure, but yeah.
I'm planning on getting out of D-Lo. They're supposed to get acquired or something. So if they sell themselves, then I'll be happy to take my money and just peace out.
Oh, yeah. Sam, do you want to stay with us through Tevis's just little spiel on Oscar and like why you were even looking at it?
No, I don't want to stick around. No, just kidding around. No, I actually wanted to just jump on for like 10 minutes, but I gotta post this video and then I gotta head back to my family, man. They're probably like wondering where I am, and I'm gonna show up and like it's like I never even left, which is fine. So
really appreciate it.
All right, yo, thank you for having me on here. I appreciate it. It's finally nice to meet you two in person, and you too, Tevis. I heard lots of good things about you.
Yeah, that I'm good thing. Tim Kramer, apparently.
Yeah.
It's like, only good things. That's the thing that sticks with people.
The inverse Tevis ETF.
Inverse Tevis. Hey man, you'd be down a whole lot because I own a lot of.
You'll be down. Yeah, you'll be down right now. You'll be down. Yeah,
crush him. Yeah, guys, be sure to follow Samsolid. Like if you want, he does high quality stuff when he posts, and he's got a lot of other things on his plate, but he is a very good follow. I think he has less than 2,000 followers on Twitter, and it just
I got almost 5,000.
Okay,
I'm getting there. Yeah, no, I know, right? Like it was just a couple of months ago. I was less than 1,000, and then now here I am.
All right, great.
Must be nice. Yeah, why is Matt always coming over here and like acting like he's
Matt is just a moody bitch, dude.
Matt is so moody. He's probably the richest one of all.
He doesn't respond to any of my phone calls. He literally ignores me, and then he comes on my stream and bitches. Like that man.
It's because he wants to be your way to get a green card, Tevis, legally.
Yeah.
So
yeah.
Oh, okay, that's right. All right, guys.
All right. See you,
Thanks for having me on. Appreciate it. Later.
All right, you want to do a quick pitch on Oscar, what you found interesting, and you have a separate. You did a video on Oscar, right? Not just a post. No, not yet. Okay, just a post so far. You want to break that down for us, and then we'll jump into the comments and answer some questions.
Yeah, I don't like. It's just the stock that I'm looking into. I think honestly, LifeMD is probably a more compelling case, but I think a lot of it is probably just my own FOMO of having seen a lot of these things run, and I want to have exposure to others. And I made that mistake back in 2020 because I diversified for the worst, diversified. So I don't want to build large positions. I kind of want to just go in with leaps on like very small positions with leaps on a lot of these, and then see where it goes from there. But yeah, I think if it's anything that I'm so convinced that I'm buying, then you guys will collectively all be the first to hear about it. But Oscar, it was just funny with Oscar because I made that post because it sounded interesting because people were tagging me saying like, oh, it's the next HIMS. And I was like, okay, well, let's check it out. And they had a lot of cash on hand. They had a very small market cap relative to like the revenue that they were doing. They just turned profitable. They had a whole bunch of like positive aspects around the business. And then I realized that, oh, wait a minute, this company is doing like 99% of their revenues in expenses, and only like a 1% falls to the bottom line. Like when you add up the SG&A and the medical loss ratio, like the medical expenses as a percentage of the premiums that they collected, that like for the full year or even the 2025 outlook was like 98% to 99%. I'm like, okay, well, there is something that I need to pick up on here that I'm currently not. And so that's the thing that pulled me away from my Oscar reading was, okay, I need to understand this entire piece, because if I don't understand this piece, then I'm not going to get the thesis of why this is compelling. But I think a lot of the numbers look interesting. I think comparing it to HIMS is probably preemptive. Because I really just like when I read the thesis for HIMS, it immediately clicked. And for this one, I don't think it's going to be a bad play over the long term, but there's a lot more contextual knowledge that I need, and it doesn't just click for me immediately, right? same with LifeMD, right? Like I need to understand the context behind their business. So anyways, yeah, that's like super high level on Oscar. The conclusion is that I'm still just reading up on it. Like I get tagged on different tickers all the time. I know Manuel said he was going to give us a whole bull case on NBIS. And then Sagig also mentioned High Tide, which is like a weed company, I think. But like, I'm not in a rush to get into any of these positions really. Like I'm not like the money is burning a hole in my wallet and I just need to get rid of it immediately. I don't really care, like, because I'm doing well in the positions that I'm in, and the market's going to open green tomorrow. SoFi's up, HIMS is up. I'm like, great. I have zero pressure to get into anything else.
Yeah, and you're building out your big hood position little bit by little bit, maybe. Honestly, the best thing is like, and I would absolutely love, like, realistically, if it just falls and keeps falling into the 40s, gives you time to add more, gives me time to add more aggressively. Yeah, I looked into OSCR a bit too, and so I did like a big surface level thing of what other people were saying why it was a quality play. I'm like, okay, it's interesting, it's worth taking a look at, and that's usually where I start. And then what I did is actually got on their website and treated it as if I was a user of the product, because I'm like, okay, that what they've identified is a real problem. Like that our insurance industry is kind of a mess. I don't understand like the business side of that as far as investment, but I'm like, hey, maybe I can learn. And as a consumer, I got on there. Good website. It was easy to use, intuitive, quick, no latency or anything.
Mm-hmm.
The premiums that they quoted me were ridiculous. And I know I expected, like, if I went in there and I put all my information in, it'd change somewhat just because I'm a healthy guy. But no, I was like, oh man, I don't know who could afford this, who would be doing this. I think if you're on the lower end scale, you're probably going through the Affordable Care Act site, and so you're not using this. Or if you're full-time employed, you're going to be with your employers. So it's like there is a market out there. I'm just like, I'm not sure how big or how growing that market is. I don't know how compelling their product is. I do like some of the connections that they have, but it wasn't a clear enough thesis. Like you said, I'm with this way with GRAB too. I think, over the long term, like, I think people probably do well in that, but I don't find it like I did with HIMS, where I finally took a look and I'm like, oh man, I've messed up. I've ignored this way too long. And I'm not going to correct. I'm going to correct it by buying shares, not just saying, oh, I'm too late. I don't see that with these two.
Yeah, absolutely. Shall we take it to some questions? What do you think? Or is there any other topic that we haven't covered?
Yeah, I think questions are appropriate. And we'll before we leave, if you remind me, I'll just read off some tickers for people that don't have the 24-hour market.
And by the way, I did send Matt an invite. And like always, Matt Farley ignores his friends because he doesn't care about his friends. He is warmed only by his money, doesn't care about anything else. All right, let's go to questions. I'm throwing shade at Matt right now because he's ignoring me.
Matt's probably not even here now.
Why do you? I will literally share with you our WhatsApp conversations, and you'll see all the missed calls that Matt just doesn't pick up at all. And he's not here to defend himself.
It's almost like he has an incredible career doing something. So,
oh please! I know it was a holiday in the U.S. today. All right.
Well, I mean, for some people, like, this is, I didn't have it off. I worked hard today.
Yes, everybody is allowed to ask questions, plebs included. You do not need to donate or have a subscription. Although if you do, I will definitely be corruptible and give you preferential treatment.
Guilty, yes.
Yeah. If you guys donate, I will read your question first. If you don't, you got to wait in the queue. All right. Let's take a look at what I've bookmarked here. Top 5 equity holdings, Roy.
Palantir is number 1, and I mean, it's over 50% of my portfolio now, despite having a lot of underwater covered calls. That kind of gets that. Number 2 would be SoFi, and then after that is HIMS, I believe, and then Robinhood, and then I think it might be Tesla. maybe PayPal. Like they're close. It's actually PayPal because I bought more PayPal last week. So,
for me, and this you might laugh at this, Roy, but I'm looking right now at the spreadsheet, and this has crypto included, so I'm just going to add that. Number 1 is SoFi. Number 2 is Tesla. Number 3 is Bitcoin. Number 4 is HIMS. And number 5, can you guess what it is? It is HIMS.
Not Palantir.
It's HIMS Leaps.
Oh, man. So consolidate those. Those are one position. That's HIMS. What's the real number 5?
CleanSpark.
Oh, really? Are you?
Well, that's because Cash is not on here. Because so if Cash was on here, it'd probably be like SoFi. If I consolidate HIMS as well, it's going to be like SoFi, HIMS number 2, Tesla number 3, Cash number 4, Bitcoin number 5.
Okay, yeah. And by the way, I'm starting a DCA into Bitcoin. I bought it like here and there, and now I'm just like, you know what? Every 2 weeks, I've got my buy-in. Buying Robinhood weekly. Those are my only 2 like regular DCA. They're kind of related too.
So what was a DCA?
Bitcoin. I have a set amount now, dollar amount that I'm buying every other week. I get paid every other week, and on Robinhood, like I'm buying Robinhood stock every week. Those are my 2 DCAs. I am DCAing in other names, but they're not like set up to automatically go. But I see those as having massive opportunity even here. So that's we talked about this before, but like real quick as a reminder, guys, like your most important thing, especially in a bull market, is not your price average. Like it's great if you want to show off. And you're like, oh man, look, I was in Palantir at like $6. It's like, cool, that's awesome. Yeah. How many shares do you have? 5. Okay, well, you've made some money, but like, what if you bought at 20? What if you bought at 30? What if you bought 40? What if you bought at 80? You'd still be up. Have a terrible price average compared to that.
Yeah.
If you're here to make money rather than show off, don't be afraid to average up in quality names that you have high conviction in.
Yes, I do have SoFi Leaps as well, and it took me way too long to like get into that mindset of not being afraid to average up. I think a lot of people are still stuck with
it's hard.
that.
It's so hard. It's way easier to average down in a bear market, even though it is scary then too. But yeah.
Okay, we will try to get to all these questions. There's a lot, but if we don't, we don't. Do you have any semiconductor names? No, I don't think so. No, I don't. Roy?
Yeah, NVIDIA.
Yeah, I guess that's one. What do you see for HIMS after earnings? I'm actually going to be doing a video probably this week at some point in the week around my predictions for HIMS earnings. So make sure you tune into that, Elijah. And then after earnings, I think HIMS is going to triple beat. And then based on where their guidance is, I think they have the potential to really explode with that short interest. I think the short interest will have come down. We'll see. Maybe tomorrow is when the numbers come out, or maybe next week. But yeah, I think it has the potential to explode or go down by a lot. But I think it's not going to do like a 2% move. It's either going to go up 20 or down 20. My guess is up 20 because they're going to do really great results. Roy?
Yeah, I mean, they've ridden up a lot. It wouldn't surprise me. I think they're overdue for a pullback, honestly. But momentum can carry it higher, even into and through earnings. And it wouldn't shock me at all. I do have, full disclosure, guys. I sold and I took some gains on HIMS. Part of that was it was not really about valuation. I don't think HIMS is a bad valuation here at all. Like it's not cheap, but it's very, very volatile. So I think it's going to pull back. But the other part is I had very deeply underwater covered calls. Now I have some left in 40s. I have some at 50s, and I have some that are free and clear. Not as much as I'd like to, though. If there's a chance before earnings and it falls and I can get out of some of those contracts, I'm going to probably do that just because I think that there's a higher risk of it going dramatically upside. Like, look at the market cap. We mentioned it before. It's a tiny, tiny share float and high short interest. So it can be very volatile in either way, and it will be. But I also don't think, like, if this is your first time looking at HIMS, maybe just start a DCA thing. If you're convicted and you're like, hey, I need to be in this company. HIMS is a stock that does give opportunities. And so there will be a point in the future, probably to buy it in the 40s. I don't think we're done with that. Maybe even the 30s, but it's a great company.
Yeah, a lot of questions here on HIM's earnings. So
Yeah.
that's one answer for all of them. But for more, definitely check out. I mean, I'm making a video on it. I'm sure Roy is probably going to make some content on HIM's as well.
Yeah,
we can
the worst
technically guilt him into it.
And I probably will. The worst thing about HIMS is when you're doing research, if you forget to put on like the incognito thing, you get a lot of like hair loss ads and ED ads, and it's like, oh my goodness, and weight loss stuff too. I'm like, no, stop it! I've ruined my ad algorithm. So
it's funny. Okay. Hood or HIMS at current prices. Also, I think this is a proxy of this one too. I have bought both over the past couple of weeks, so yes, and I think Roy's a yes as well because he's also averaging up.
Yeah, great companies.
But which one, if you didn't own a position, which one would you buy with what you know of both companies at this price today?
Robinhood long term.
Interesting. I'd buy HIMS.
Short term, I think HIMS would probably outperform, but if it's in my swing portfolio, let me say I'd put it in HIMS right now. I think that there's a high chance of more upside in the near term. Could be wrong. I'm not an amazing trader. I do okay, but yeah, long-term investing is what I do. And from these two companies, like I know for sure, firsthand experience, right? Like Robinhood is an absolutely stellar company. 100% sure on that. HIMS, yeah, I think it probably is, but I don't have nearly that conviction. Not yet.
Yeah, I would. I think it's like flipped for me because I've just been in HIMS for longer, and I just know more about it. I had this wager, and I think I told you guys about this in a previous bootleg with a friend of mine who thinks that my buddy Ben in 5 years Tesla's going to outperform HIMS, and I said you're absolutely crazy because his whole thesis is Optimus bots, and I was like, dude, this is like a $9 billion company. Like you're high if you think that a $1.2 trillion company is going to outperform it over the next 5 years.
Yeah,
so
if HIM was like a JOBY, it was just kind of a joke, low margin, just waiting on like, yes, Tesla would outperform, but yeah, HIMS was just mispriced so badly. Like I usually, when I enter a position, I don't go in that heavy and that hard as I did with HIMS. And I'm like, dude, I need as much as I can allocate and as much as I can get.
Yeah. Let me scroll back up here. HIMS is not allowed in a couple of states. It depends, Wes, on what product offering you're talking about. I know for GLP-1s, that's the case. But they're still expand. And like, this is also one of the things that I want to flip as a positive to say that, not only is half of their product roadmap not even, on the docket for this year, but also they're not even fully penetrated in the US, let alone international expansion. Like this company is insanely in its infancy when you think about their growth. So just something to keep in mind. Thoughts on BlackBerry? Yes, we're going to have Matt, and not the Matt that I am messaging right now, the other Matt, on the stream one day to tell us all about BlackBerry. So Matt, you're welcome. Just DM me on X and we can set it up.
Yeah, I don't know on BlackBerry, but I will say it's, if you guys are like, oh man, BlackBerry, isn't that dead? What they're doing is not dead. It's useful. It's interesting. I don't, I don't have a position, but yeah, don't write it off.
Are you taking profits on HIMS? If not, yes, we both have taken profits on HIMS during this run up, and probably I'm going to start unwinding some of my options if we go up higher. I'm still going to hold probably half of my options over earnings because they're leaps for 2027. And then part of my position is just going to be long term. I'm not going to touch it, but I'm also, I have a core position. Then I'm also like trading around it as well.
Yeah, and I've already answered. I've taken some profit, mostly not because of valuation. I don't have a problem with that. Just volatile and deeply underwater covered calls. That some, I don't mind rolling to a certain point, but sometimes it's just better to let things go.
How long do y'all plan on keeping SoFi for?
At least through today.
Okay.
The real answer is we'll see this year. This year, I think, is a pivotal year for them. If we see continued reacceleration, I think the loan platform business is phenomenal. They have a lot of tailwinds. If I don't see any, like if what they hit this year is what they've guided for in the tech platform, and I'm not seeing any other indication that it's really heating up, despite a much more favorable macro for that, I may not end up holding SoFi as long as I thought. So it might be, another couple of years and then I'll get out. But yeah.
Yep. Okay. Would you consider, oh yeah. For the foreseeable future or until the story changes, whichever one comes first. Would you consider Tempest AI as a potential investment if we get a big dip on the share price? 1.2 billion in 2025 revenue and 14 billion market cap. Like, I love, Elijah, that you think that's cheap. In normal circumstances, it's not, but in this market, absolutely it is. Yes, I would consider it. I don't have anything, like, I'm not biasing myself against any trades. But again, I don't know anything about it other than the fact that Nancy bought it and it's up like 150% this year or something like that.
Yeah, same. I'd look at it, but I'm at the point where I have 10 holdings that are long-term, and I would feel the need to exit one of those if I was going to add something else. And maybe I would. Seller is one of those that I think is great long-term, but it's high risk, high reward. I could see myself at some point just saying, hey, I'm going to go after something I think is going to perform a little bit faster. Enphase is another one that's kind of like that. It's sitting there. I know at some point that's going to turn the corner. Great company, but I don't know when that is. So yeah, I'd look at it. I've probably spent less than 10 minutes on looking at Tempest AI. So I would need to do some digging.
Any thoughts on pins? I absolutely love Pinterest, the business. I've held this one I've traded in and out of it, but I've held it for like pretty much since the IPO. I remember buying Pinterest like in the teens and averaging all the way up. I remember when it dropped all the way down from like $80 when PayPal made that offer, and it dropped back to the teens. And so my pins position is not large by any stretch of the imagination right now. It's only about like 1% of my portfolio. My lemonade position is larger. But I honestly think Pinterest is on the comeback story or turnaround story. Really bullish on it. But the market does not seem to like it for whatever reason. Like the stock is very detached from what the company is doing. I think their results were fantastic. I mean, it went up like 20-something% on those results. So
yeah, that's not bad.
Yeah. Okay. Hey, Roy, any cons of owning TMDX that you know of? Looking for any reason why the stock may be bad, but I haven't seen any yet.
I mean, there's a chance that it's a value trap. I like, my biggest issue is I know nothing about the organ transplant business as a business. I know that they've had issues in the past with I don't know if supply chain logistics is the right word for organs or not, but that's very expensive side of the business. I don't know if they've figured out those issues, but that was one of those major bear cases. I think that they announced a new partnership, if I remember right. It's been a little while since I've looked at this company. But yeah, that was probably the biggest issue for me. And that I don't have a great sense of like the leadership and the culture there, but it doesn't look like, to me, like incredible, competent leadership. At the very least, they have one of Elon Musk's qualities, which is not great, which is over-promising and delivering. That their timelines are numbered. Like they're not like hymns that they always triple beat, or Palantir that crushes, or Anthony Noto. Like you know what you're gonna. I don't have a sense of that with leadership at all. And leadership culture are a big thing, and I think it just take me a long time to understand that what that business side of organ transplants looks like. I know a lot of smart people that are in it. Like the actual balance sheet and everything, it looked pretty good to me, but I don't know.
Okay, I don't know anything about TMDX other than the fact that people are buying it. Can you talk about HLF bouncing off the lows? I don't know what HLF is. Do you?
No.
Okay, so the answer is no.
Herbalife, yeah. Oh man, that's been around a long time. I know that company actually really well. From a long, long time ago, I had family members that were Herbalife members, and yeah, that one's a crazy story too.
Wasn't this the
I've
Ackman Icon battle thing?
there was a lot of shady stuff going on with it. It's a multi-level marketing,
MLM,
and I think that they've changed some stuff. I don't really know. Like what I know of Herbalife is like back from like over 25 years ago. So,
So
but
no, we can't talk about it. Moving on.
yeah,
We got a lot to get through.
yeah.
What's your fair value for HIMS?
I don't have one.
Me neither. Nebius, yes, I got to get Manuel to explain this one to us one day. I read one of his posts on it, but he said a new post was coming out soon. So let's see if we can convince him to come on and give us the full bull case. I think the idea that I'm getting from today's episode, Roy, is that we should bring back. I know Tanner and I have talked about it, but we should bring back that stock tank at least for a couple more episodes for stocks like this, like getting Amit for GRAB, getting Manuel for MBIS, and just getting people for smaller names. Let me know what you guys think of that, if you want us to do that or not. And if so, I'm sure we can scrounge up a couple of people to give a presentation on stocks.
Yeah.
Any of you still DCing into Tesla, or are you guys waiting for a bigger pullback? Royal, you go first.
I'm not. I actually sold a couple of shares that I thought I was going to buy back just to run out of position. Sometimes I do that, and I don't consider it a sell in my mind. And now I'm like, it wasn't a lot of shares, but I'm like, I don't feel a rush to do it. And the reason why, there's a couple of reasons. Like real quick, had a minor fender bender. I have Tesla insurance. This is our first time ever having to contact them other than just send them payments. And it's not a great experience. It's really terrible. I saw some issues with some of the superchargers. Somebody did reach out on X and they figured out what chargers there are, and I think that they resolved that. Elon Musk, I think, has done some brand damage, and I do think that that's a lot more legitimate this time. Not that the case is over. Like the Model Y refresh is out, and I think it's going to do very, very well. I do believe in automation. I do believe in Optimus, but I also believe that this is a narrative-driven stock, and I don't think that there's a great rush to buy it for me at 350. There's other names I'm more interested in. Now, if we're here 6 months from now, and the plays that I'm in, they've fizzled out or they've gone up, they've done what I thought, and I'd buy, at that point. But we'd have more clarity on what that looks like.
Yeah, I'm in that same boat. I'm closer to cutting some of my position. I have already cut a little bit of my position, which has been all gains, than I am on DCAing into Tesla for the exact same reasons. I mean, we've talked about, I think we've dedicated a full bootleg talking about the brand damage that Elon has caused like 2 or 3 episodes ago. And so I just think that like you have an outsized level of risk. Of course, Tesla is always Tesla, and it's the most like bipolar stock when it wants to be. It can just go to 600 tomorrow, and I literally would not be surprised. I'd be very, very excited and happy, but I wouldn't be surprised because that thing can catapult like nobody's business. But their numbers haven't been good for the last 5 or 6 quarters. They've been sort of on a plateau or a downtrend even. The brand damage is increasing as a risk. The attention that Elon is dedicating to other projects is increasing. Like now he has like baby mama drama as well, like to add on top of it too. So I think that this, and then despite all this, like this would be fine if the stock was 200s, who cares? But despite all that, the stock has done, a big move in the past 6 months. And the only thing that's really keeping it alive right now is the prospect of FSD and the prospect of Optimus, which is great. But I also think that like there's a lot of optimism baked into that one, and I don't feel comfortable buying right here. But this is from somebody who's owned this stock for like 5 years. Okay.
Yeah, you can tell Tesla does not have his attention right now. So
yeah, I thought CleanSpark earnings was good. I think the market is still making a determination on what they think of the earnings. It's mainly like a dilution issue for CleanSpark. I know TJ's big into Riot, and that one has largely decoupled itself from CleanSpark. Like Riot is now trading for higher than CleanSpark is. But I thought the earnings were good. I think I want to see more around how are they going to be spending all that money that they raised. And I think their strategy is unique, that they're not just going to be putting it blindly into Bitcoin at whatever price. And they're going to be reinvesting in the business. So remains to be seen. But CleanSpark is still a very short-term trade for me.
Yeah, I liquidated it entirely. I took a lot of the gains near the most recent local top. I had a little bit left. I needed it for another trade. It's only in my swing portfolio. I don't want to ever own it long term. I think Bitcoin miners are just not it.
Mm-hmm. What price would you consider buying more Tesla? It's a great question.
250.
250. Really? Yeah, so 250, I guess, for both of us. Yeah. Any thoughts on BABA and GRAB? I mean, we had the full first half of this podcast dedicated to GRAB. I don't really love international companies. And so if I did buy, I would buy if I'm super, super bullish, which I would have a higher threshold for international companies. And then I would have a smaller position altogether. Like, I don't think I can ever make a Chinese company or a Southeast Asian company, 20% or more of my portfolio. I wouldn't sleep easy at night.
Yeah. I would regard China. I don't have any Chinese companies. I don't think that I would. It's not so much the company themselves; it's the CCP. I have many rants on this too. I view that they're set up in the government, that they're the true owners of the company, and a big part of my thesis is leadership and culture. And it's like, man, I don't like the leadership of the CCP, so they don't have their interests are not aligned with shareholder interests. So.
Mm-hmm. Do you also have SoFi Leaps? Yes. Mm-hmm. I have 2027s and 2026s.
Yep.
Any concerns with U.S. companies losing business in Canada? I mean, yeah, but how much of business are they going to lose? Canada is 1/10 the size. The bigger concern is the other way around. Like, a lot of Canadian businesses solely rely on the U.S. for their business. And so the concern is that they're going to lose their number one client. And as a result, they're going to have to lay off a whole bunch of people. And then that's going to be a bigger concern. But I think the US, just by having a bigger market, they also have way more product offerings. And for a lot of products, there just isn't a Canadian comparable. So I don't think a lot of US companies should be worried. Top 5 based on principal invested. Yeah, dude, I don't think either of us want to answer this question because we don't really want to disclose actual dollar amounts. And then
I don't know it offhand. I'd have to look.
And then the other thing is, anytime I have disclosed dollar amounts, then I get the comments of oh, you're lying. Why would you buy 100K of SoFi? Your entire net worth is probably 10K, the stupid YouTuber. And so I'm like, you guys can go fuck yourselves. You're not going to get, that level of transparency if that's just anyway. So I don't really, go into that. I will say my top positions are all 6-figure positions. I don't have any that's bigger than that, obviously.
Yeah, and Palantir and SoFi would still be number 1, number 2 for me. After that, I'd have to look. It wouldn't be Robinhood, just because Robinhood just man, it's been good.
I feel like Tesla will have a decent pullback. I just bought NVIDIA. Would you add HIMS now? Mm-hmm. I think if you don't own HIMS and you want to hold it for the long term, then go crazy.
Maybe not crazy, but yeah, I'd start if I had no HIMS, knowing what I know right now, and I didn't need the money in the next 5 years. I would absolutely buy. I'd start DCAing now.
Thoughts on Estee Lauder?
I have none.
Me neither.
That's hard for us guys. You can look at a stock and just trade based on that, but something like ELF was another big one.
I think ELF fell quite a bit, right?
Pardon?
I think they fell quite a bit on earnings, didn't they?
They I don't know where they're at now, but yeah, they did fall some earlier this year. And thankfully, I've got a almost teenage daughter. I've got a wife. I can ask them those things, but it's not the same as any other consumer facing product where we're actually users. Yeah, it's down a good bit from its top. Mm-hmm. Wow, it's really fallen actually. Interesting. Maybe I'll have to take a look.
Are you guys bullish even with all the tariff turmoil and political tension? Yeah, I mean, look, there's always going to be noise in the market. I think you have to look at the forest for the trees. or the other way around. No, yeah. Look, zoom out is basically what I'm trying to say. And when you do zoom out, I think just on a whole, you're going to a better time than you were in before. You're going to have less regulation, more free business, free enterprise activity. And yeah, the tariffs are going to be difficult in the beginning or maybe overall. But I think that the world, like there's more uncertainties getting alleviated in that right now than exist. Because don't forget, 6 months ago, there was like multiple wars going on, and now they're all in talks to be resolved. So that's also a big factor.
Yeah. The term is climbing the wall of worry. In every bull market, everyone, there has always been a lot of reasons why people have been concerned that the market's going to pull back. Usually when bear markets come, not if, but when, people don't see them. Like some people do, always. But that's one of those reasons why if you look at somebody like Michael Burry, it's like he always he predicted like two of the last, or I got the saying flipped, but basically he predicted out of his like 100 last predictions, 2 bear markets, and he has 100 predictions of it. It's hard, but yeah, there's always things that people are worried about. Now, if you're concerned, like as an investor, the time to act is now. Like if you're like, hey, I'm in risky stuff, I don't want this exposure, or I need this money in the short term, or I should hedge, do that. Like we had an opportunity 2 Mondays in a row where we had these big pullbacks. On the second one, I'm like, oh man, I wish I had built out this hedge. I have the hedge now. The market reverted. It acted like nothing happened. And it was all around tariffs. And I'm like, hey, I'm going to not hedge my full position because it would just eliminate gains, but at least have some downside protection there. Cash is also a form of hedging. So,
okay. So, and we really need to wrap this up in the next 9 minutes because it's been 2 hours.
Tristan asked, do you guys have any hedges beside holding cash?
Hold on. You're at the very end and trying to go chronologically. Eddie, have you looked at the revamp going on with BlackBerry? Yes, we're going to have Matt coming on the stream. HIMS end of year price target. A lot of HIMS people here. I love it. End of year price target, Roy? Throw out a number.
Let's see. What did I have it? And I don't want to make. I had it at 80. Was my base.
80.
I think it can go higher. Like the thing that if you don't know this, we won't go into it because we don't have a lot of time left. We've talked about it before. That compounding revenue will go away. Their comps are going to look not so good as a result. Still growing very well, still a fantastic company, but that's short-term revenue. That's a sugar rush. We don't know how long that's going to play out.
Thoughts on Shopify for the next 2 years? I loved in their most recent earnings, that revenue jump is insane, dude. So very bullish on Shopify.
Yeah, great company. It's not one that I think will ever run.
Okay.
It's like
you got 30 seconds.
It's completely de-risked from my perspective. I bought a good bit last week. I'm buying a lot tomorrow. Like it's one of those things where I have cash and I would rather hold PayPal than cash. I think it's about as safe over the long term. Like they have Investor Day coming up as a good potential catalyst. Usually PayPal moves when people write it off for the dead, and that's what's happening right now.
Okay. That's exciting. Have you heard of Clover Health? Yes, it was the Chamath SPAC IPOC, I think it was.
Yeah.
Haven't really read into it since Chamath released the SPAC. Okay. Do you think 350 is a good entry for Tesla? It depends on how long you want to hold it and what your risk tolerance is. Any thoughts on Rocket Lab?
I missed it.
I missed it too. Great. For Rocket Lab, follow Matt Money's channel. He does great content on Rocket Lab. Let's see.
Though I thought I missed Rocket Lab at 7, so I mean that shows what I know. Oh yeah.
Thoughts on NVIDIA earnings?
Yeah, they're going to do well. Market has written them off a little bit. Like they're where they were like 6 months ago, and they've performed a lot better. So
I think it's going to do well as well. What do you think about buying it at this price?
I have no problem with it. Yeah, I'm going to probably be buying more of that tomorrow too.
Would you consider LFMD as an alternative investment to HIMS? Yes, but with a small portion. because there's, I think, bigger risk relative to HIMS. And don't forget that LFMD is going to have HIMS as a competitor as well. So as much as you love HIMS, do you want to have them as a competitor with this other business? But like, I think it's very small. So yeah.
Yeah. No, I agree completely.
Pins, I talked about it, bullish on it, love it. Hold on. Let me see. I don't understand Pinterest. Why is it popular? It's popular because it's basically a visual search engine. At least that's how I'm viewing it. I have made videos on HIMS in the past. So if you want to go digging, you can definitely find those. You'll have to do some digging though. But I think there's playlists that I've made. Better buy HIMS or Google at today's prices. HIMS. Yeah, okay. Then no debate there. 2025 feels like the year of turnaround stories. I agree, man. Thoughts on Uber, Roy? I saw, who was it that bought? Ackman, I think, bought big.
No, good company. They own a lot of Grab too, by the way. So if you want Grab exposure, that's one way to grab it. I don't think that they're going to get killed by Waymo, by Tesla, at least not right away. And they diversified a good bit too. Like they're just a smart, well-run company.
How do you guys balance time between your jobs and YouTube? Great question. You want to go first?
It's tough. I'm also working on a PhD and I have a family. So there's never enough time. Like this is one of those seasons where every single aspect is busy for me. So I'm just doing the best I can. I tell Tevis no quite a bit. He's like, hey, let's hop on and do another. And I'm like, no, I can't. No, I just learned to say no, not say yes with every opportunity, and know what's a priority. This, as much as I love it, the guys, this is not my number one priority. It's like number 4. Love this. It's a highlight for me each week.
Yeah, no, I love this too. And I think that's part of it. And I think the other part of it is that you can just control your hours on here. Like you can make your own schedule, and that makes it a little bit easier. But I don't have a full family and all the nice stuff that Roy has. So I have, I guess, more disposable time. Because if I'm not with people and if I'm not actually working on stuff, then I'll just do YouTube stuff. Great question, though. Any thoughts on Rivian earnings this week?
This is their first time that they're going to be profitable through the tax credits. I haven't looked at the price action recently. Let me just.
We don't have time.
Okay. Well, it's going to probably be up, I would guess. And then it's Rivian. So great product. Stock, I'm not convinced they light cash on fire. This will look like, oh, wow, they're great. No, it's a one-time thing.
Doesn't Elon have like 12, 13 kids? He has 13 now, apparently, if this secret child is real. It's like literally a reality TV show, dude. Archer Aviation, they partnered with Anduril, I think, or partnered with Palantir.
Palantir, yeah. Yes. Yeah, I'm not convinced that eVTOLs are the thing. So I wouldn't personally invest. If I chose an eVTOL company, it would be Archer.
Honestly, guys, like for all of you guys just asking a ticker with a question mark, just literally tweet at us and we will make a poll of what we should talk about for a stock tank episode. And then we will try to find somebody who talks about that stock and invite them on. Because there's a lot of the stuff that we just like, we're human that have many priorities that we can't really keep in track with all of these other tickers as much as I would personally love to. AMD for the second half of 2025, you think it's going to turn around?
I'm not convinced. Lisa Su's great. I do think it's a good company. I just don't know if it's a great one.
Okay. Heinz is asking, Tevis, you don't like international companies? Yeah, man, only U.S. companies. I think that's where the main money is to be made. The U.S. markets is way better than the Canadian market, so I'm not investing in Canada at all.
And Tevis is basically an American.
Yes, sir, by proxy. Also, you have currency risk too for the CAD, for example, right? Thoughts on where we are in the market cycle? Thoughts on tariffs? I mean, it is what it is.
Local top, I think. I think we're near one, like within the next 2 weeks.
That's probably a better take, yeah. But like I do think that a lot of this stuff is already priced into the market. Price target for NVIDIA, end of 2025, go.
I don't have one.
Me neither.
Some companies I do, some I don't. I'm just good company long term.
Yeah. Okay. Hold on.
Somebody
Have you guys used the HIMS product? No.
no.
Okay. I'm making my way down, dude.
Yeah.
Tevis is Canadian, yes. What about App 11?
Yeah, I don't know enough about it. I know like it really flew up. I looked into it. I'm like, hey, it's not the kind of business I really enjoy holding. I don't particularly like what they do, but yeah.
Do you have any hedges or edges, as Tristan would say?
Block puts.
Yeah. I don't have any hedges beside cash. I have to go to the gym. Yes, I really do, because I'm going to be late. And Elijah convinced me to go tonight.
All right.
Let's see. Anything else that's interesting?
So
I'm
just
trying to get to all of them, but like you guys can collectively type faster. There's like 400 of you.
Somebody put Poet in there. I think Poet is, I don't know about the technology and everything. It seems like an absolute scam to me. I have a post on it. Go to my channel, more detail. We talked about it in SoFi After Hours, which reminds me I need to post that video for members only. I would stay away. Be careful.
Yeah. Sagig, if you're comfortable going on camera, I know we've talked about this before, but if you're comfortable going on camera, then I would love to have you on the pod talking about LFMD. What's your dollar retirement number? You 1-800 retirement. You comfortable sharing that, Roy? Do you have one?
No. We're on track though. I'll say that.
Attaboy. Love that. Yeah, if I can have as much as TJ has by the time I'm TJ's age or younger, then I'd be great. I'd be happy with that. All right, I'm not going to try anymore, man. There's so many. I'm sorry, guys, if I didn't get through your question. I apologize. But we have to go because we've been on for 2 hours, and we're going to hit you with an ad right now, and then we're going to leave you. So thank you so much, everybody, for being here. The Bootleg Weekly. Like and subscribe to the channel. Follow Roy on his channel. Tweet at us in terms of what you want us to talk about. We will try to bring the stock tank back. Invite Tanner, and we'll do like a panel, all three of us, talking about the stock tank. Robinhood is apparently advertising on my channel, which is great.
All right. Appreciate you guys. You guys are awesome. This really is a highlight for me, and appreciate it. Thanks for all the questions and interaction. Makes it fun.
See you guys. Love you all. Bye.